and I am super excited to be having this opportunity to chat with Tom here about quite a few topics that I think you'll get some real value out of in terms of just general reflections on the direction of travel for Web3, but viewed through a sort of a policy lens, really. We've got some interesting topics ahead of us. I don't think there's really much need to sort of go too deep into the introductions. Everyone knows who we are. So shall we just crack into it?
Let's do it.
Okay. So I think the first thing I'd like to talk to you about is trust and resilience. Especially after the sort of turbulence of recent weeks and the sort of big sort of futures unwind incident happened in mid-October, where a lot of exchanges froze. Not Coinbase, I have to say. I wonder, sort of, after that sort of shock, what's the sort of single biggest lesson that you think people should take away in terms of protecting ordinary investors and keeping that confidence and trust alive?
Good question. Well, it's great to be here. Hi, everybody. Look, this morning I came from a trust conference, actually based on travel rule compliance. So this is not as sexy as Zebu, I'm going to tell you. But it reminded me that as an industry, we've got to do the basic things right. So we've got to do AML, we've got to do travel rule compliance, et cetera, because that gives us legitimacy. And if we have the legitimacy, then we can kind of like build the trust. And we can get into those conversations about how do we take crypto mainstream. So today, for me, has already been about kind of like trust, about protecting the retail consumer, and it's super important. But to go back to your question about the flash crash, what does it tell us? Well, look, it tells us that crypto remains volatile. I think there's good evidence, and on the trend line, when you zoom back, crypto is actually becoming less volatile. If you look at the biggest tokens, you look at Bitcoin, et cetera. But the smaller tokens in the industry itself still kind of remains quite volatile. It also reminds us that this is quite a young market structure, and that we're still trying to kind of like grow and adapt that market structure. But when we think about, what did it actually tell us? Actually, we had an idiosyncratic problem at a single exchange that created a ricochet of kind of like liquidations. But look, here's the good news. Nothing broke, right? No stable coin kind of or protocol. I mean, there was a depegging on one platform, but no fundamental issues. So DeFi actually performed kind of relatively well through this kind of like crisis. And actually, we still had net inflows into crypto during that week. So I think 3.2 billion of inflows into the US kind of ETFs. So look, we have kind of a volatile market. It's getting less volatile, but it is punctuated by these kind of episodic incidents, and we have to learn from them. You asked about particular lessons from this one. I think we need to look at ADL. I think we need to look at auto-deleveraging, and we need to make sure that there's transparency about who's being liquidated and why and where. But I think more or less, particularly you mentioned Coinbase, we did have some liquidations. No one wants to see that, but that's part of a market that's running effectively, and most of that was happening kind of in an orderly way. So I think we may continue to see that volatility, but stepping back, I think DeFi was resilient. I think the overall market was resilient, and I think if we learn the lessons, we can continue to build from there.
Okay, so you feel like by leaning into this ADL concept that that will help to protect ordinary retail investors, particularly, or institutions, or both?
Well, look, I think both. I mean, if you're trading with leverage, right, then you need to understand kind of how the liquidation process is going to work if you find that you can't make the margin call. And we have auto-deleveraging kind of processes. I think more or less they work well, but we need to make sure that people who are trading, particularly retail, that are trading with leverage, they understand the risk that they're taking, and they understand what that risk waterfall looks like. So if that is the case, we should continue to allow that. And look, trading with leverage and perps for retailers illegal here in the UK, but we're hoping as the market matures, that position can and will change. We think having access to derivative markets on crypto is an important thing, and we see that in multiple other markets, really important for price discovery, amongst other things.
Okay, great. So that idea that of earning trust, I think it leads us naturally to sort of where does the sort of power sit in a market that was meant to have none? That was the whole idea of sort of decentralization initially, right? So I'd like to talk a little bit about centralization versus the sort of DeFi ideal, because obviously crypto came out of the decentralized movement, as it's matured, obviously we have new centers of gravity that formed around the sort of trusted players. Now, obviously, Coinbase has done a fantastic job of becoming the custodian for sort of a lot of Bitcoin ETFs, especially in America, and has become the sort of done an amazing job of becoming this sort of symbol of trust and concentration. But I wonder, sort of just taking a step back from that, as the industry scales and regulation kind of becomes more prominent, how do you see these new centers of gravity, and can the idea of decentralization still hold?
Yeah, look, it's a great question. I think at one level, you can say the industry still remains kind of very centralized. You've got about 75%, 80% of kind of liquidity moving through a handful of kind of centralized, exchanges. We've got just two kind of major US dollar-backed stablecoins, so Tether and USDC, that are the kind of the settlement assets for most of this market. You've got just a handful of custodians, so that's very centralized. On top of that, you've got regulation, which is coming in. So MiCA is a really good example, which is the European markets in crypto assets. Effectively, what's that? That's creating a moat, and it's creating a barrier to adoption, and that is centralizing. So by the way, we think MiCA is good, but the point here is that where there were thousands of registered kind of like VASPs in certain countries, so take Poland, for example. I spoke to their finance minister a year ago. They have 900 plus registered, AML-registered VASPs. Like, they're not going to have 900 MiCA licensed entities. So concentration will also kind of increase as a function of regulation as that comes in. So those are some reasons why the market is centralized right now. But I'm pleased, and I think as Coinbase, we're pleased to see that actually there's a growing force and trend towards decentralization, right? Which is where we're going to see the major benefits of this kind of underlying technology and get back to the ethos that you, Alex, were talking about beforehand. So I don't think anyone has the precise figures, but we're seeing now decentralized, kind of perp dexes trading anything between 10 and 15%, right, of the total kind of like, perp volume on a daily basis. Like, that's a lot, okay? And they've come from kind of nowhere. So I think that's really positive. We're also seeing dramatic growth of self-hosted wallets. Think of the MetaMask, think of the Phantoms, et cetera. More kind of like self-hosted wallets than there are kind of custodial wallets. So that's also kind of pushing in that direction of decentralization. And then the third point I think I'd raise is, look at the US, for example, and we'll talk a bit more about this perhaps, but the US now has a sense of how do we bring DeFi as a concept, i.e. removing intermediaries from the process, not just in crypto markets, but into TradFi markets, into capital markets. And so introducing this kind of concept of, how do we fundamentally delayer kind of equities trading and bond trading in the US to make it more decentralized? For example, how are we going to allow, US stocks and then hopefully global stocks trade on decentralized exchanges? How can we have people self-custody some of these traditional market kind of securities themselves? How can we use verified pools to arm's length KYC? So there is a vision that the SEC has, which is such a powerful vision, which is pushing in that decentralization kind of direction. But I will just kind of finish with kind of one thought, which is, I think if we as an industry want to move further and into that kind of decentralization, I think we've got to learn how to talk about that in a more compelling and persuasive way with regulators. So like, my sense is that crypto is not anti-institution, it's just post-intermediary. And kind of what I mean by that is that we are going to be able to redefine intermediation, right? But you've got regulation that is going to re-intermediate, unless we're able to think of a way of describing accountability for the regulators such that they can allow for the decentralization to happen. So we need to kind of explain to, whether it's the FCA or whether it's the SEC or others, that kind of we are not rejecting accountability by saying we want to move towards DeFi, but we want to reinvent accountability and have accountability in the code and in other places. But I just touched on that, and I know that was kind of complex and a lot of jargon, but I think the point is we're centralized at the moment. We're becoming less centralized and more decentralized if we want to really deliver on, I think what is the promise, and I think what the US is doing right now, I do think there's a lot of kind of serious conversations and work we have to do with the industry to get regulators more comfortable with DeFi.
Okay, interesting. I mean, it's encouraging to hear that you feel that the two ideals can coexist in the real world in practical terms. Before we just move on, just quickly though, just to take one practical example of that. You mentioned stocks and shares, etc. But I'm interested in the idea of price discovery. So, especially if you have kind of large institutional investors with, ETFs that are sort of creating this kind of new center of gravity at the center. I'm wondering, where does kind of, price discovery or the true price of crypto assets happen these days? Is it happening at the center? Is it happening on the edges? Is it on chain, in the exchanges, or somewhere in between? If you could just briefly give some thoughts on that.
Yeah, I think it's a great question. I'm a humble policy person, not a trader, so the traders in the audience can correct me. But look, I think there are multiple different places that we're getting price discovery from. I think from Asia in the perp markets. I think from the centralized exchanges, kind of on the spot side. But I think increasingly, and I think this is a bit where the question comes from, we did see a problem in price discovery from a centralized exchange last week. And I think the question behind your question is, will we see more price discovery happening in DeFi? And I think that's absolutely going to happen, particularly as I talked about the growing kind of market share that you're seeing the decentralized spot, but also perp, dexes begin to have. I think my other kind of thought on this is just to say, price discovery will depend on the underlying asset. And so if we're talking about tokens that are brand new, it takes a while for Coinbase, for example, to kind of go through the process of figuring out, are they robust enough? Can we list them on our centralized exchange? And so price discovery for those tokens that kind of come out and get traded immediately will often be on the decentralized exchanges before they come back to the centralized exchanges. So I think there's a few nuances here, but certainly we'll probably see more decentralized kind of price points for price discovery. But we will continue to see, I think, really important price discovery from the spot market, from the centralized exchanges like Coinbase and others.
Okay, great. So I really want to talk to you about the UK and in particular, London's position, obviously being from the London Standard. But before we come to that, so I just wanted to just quickly touch on policy and whether it can be an active growth engine in itself. So, because people's perception of regulation is that it's kind of acts like a brake. And I think that that's a somewhat naive view in that it can actually be the accelerator if framed correctly. But obviously the race is on to see who can actually sort of deliver the ideal balance between the freedom that Web3 can bring and the need for regulation to give people confidence to operate in those markets. So just briefly, because I'm mindful of the clock, do you think that smart regulation can actually become a competitive edge? And which territory do you think is actually doing a great job of that or proving that case right now?
Yeah, I mean, I think this was the easiest question when I saw the list because there's no kind of doubt in my mind when you look at what was happening in the US, right? So we had a very difficult, challenging situation, I think, as you all know, under the previous administration, right, described by some as kind of lawfare against the industry. And as a result of that, we saw the offshoring from the US of a lot of innovation into crypto. And actually, the UK was a beneficiary of that, as were the Middle East and some other kind of like Asian markets. You've now seen the reverse of that, now that there's a new administration in the US, and they are regulating and legislating. So it's both happening at the kind of Genius Act level and the clarity level, but also really interesting advances in crypto happening, conversations with the SEC and the CFTC. And so that has completely taken the handbrake off on the US side. So investment and activity has moved back to some extent from it kind of being offshored. And almost a day doesn't go by in the US now where you've got a new stablecoin project announced, or you've got more traditional banks and neobanks talking about how they're going to move into the crypto space, as well as the crypto space moving in the other direction. So it's super clear to me that good regulation and regulation in the space correlates with adoption. Like maybe that correlation isn't totally linear, because there are some markets around the world where like the economic imperative to adopt crypto because of like the high inflation rates that you might see, could be the bigger driver. But most of all, I think you will see a correlation between adoption and innovation with a clear regulatory framework.
So just dwelling on that just briefly, I'm fascinated by the idea of the different approaches to regulation around the world. I sometimes think of Europe versus America as almost like fire and ice. They have all this energy, and on the other side of the pond, and in Europe rather, it can often move at a kind of somewhat glacial pace with the sort of prescriptive regulatory approach that they take. I'm curious as to whether you think that we will end up with a kind of a patchwork of different approaches around the world, or do you think we will see something along the lines of what we've had with GDPR, where the baseline of principles of GDPR have become adopted, even in territories where that regulation is not applicable, like the rising tide has lifted all the boats, not to throw too many metaphors in here. So the question is, do you think that we will see a sort of a patchwork effect, or do you think that we will see a new global standard emerge?
Look, it would be great if we could have just a single kind of quilt without the patchwork, and we could have similar kind of rules everywhere. I'll give you an example of the problems that we're having right now from the patchwork. So if you look at stablecoins, arguably one of their biggest use cases is cross-border payments. Right now, you've got USDC, which is regulated under MiCA in Europe. It's also regulated in the US. So it's got dual issuance. It's issued in both different places, but it's a single token and it's fungible. And you've got the EU, though, worried that you've got a fungible token, but it's not regulated in precisely in exactly the same way. And so there are questions about whether it's legal or not to have that fungibility. And so, if the rules are more similar, then it's more likely we have that fungibility. I'll just pause on that for 1 second, because I do want to say this. I think it's important. The EU's concern about the Genius Act is a bit of a kind of enigma or question for us, because if you back a stablecoin with short-dated US Treasuries is the deepest and most liquid market in the world. It is they are the reference point for the global financial system, and it's not clear to us that using those assets, those strong assets, is in any way somewhat more risky than putting the reserves in a bunch of European commercial banks that introduces kind of credit risk. And so that's just a question that gives us pause for thought at Coinbase, and we're hoping that in actual fact that this thing will die down. But to come back to your question, look, and I remember this from my previous job where I worked in traditional finance, you're never going to get 100% alignment between rules across different countries. It's just not going to happen. It's not realistic for us to want that. But what we do want is, fundamentally, we want everyone to be speaking the same language. Like, there's going to be different dialects, like different kind of expressions and other bits. But so we need the rule sets to talk to each other. That's vital in order to have this kind of global market operate. But I think the best is the enemy of the good, and there are idiosyncrasies in each market that will need to be kind of like accounted for. So I'm really hopeful that we'll get a global consensus, roughly. Everyone will start to speak the same language, but we'll have to kind of make room for some regional variations. And by the way, India and some other massive markets, have legitimate concerns about, how stablecoins and how other innovations are going to impact if your currency is not free floating.
Well, just briefly, in terms of inadvertent implications, I'm just curious as the sort of, about the sort of inherent tension between the need for policy regulation in the sort of Web3 space, but also the need for privacy. And I wonder, things like, the EU travel rules, for instance, have sort of introduced a whole layer of inadvertent transparency in terms of, but even not necessarily specifically about those rules in particular, but just generally, do you think we can find a balance? Because if Web3 cannot offer that level of privacy for people that regulators perhaps are seeking, then how will it ever sort of get real mainstream traction in fields such as healthcare or microtransactions?
Yeah, look, it's a great question, and this question has evolved, and I'm glad you asked it in the way you did, because I think 2-3 years ago the question was all about, hey, crypto's pseudonymous, no one knows who anyone else is, and this is a kind of these are rails for kind of illicit, kind of dark, unidentified money and people to kind of move. Whereas actually, I think the more nuanced question and sophisticated one is the one you asked, Alex, which is actually everything is transparent. These blockchains provide immediacy and immutability. And if someone knows your wallet address, they can track everything you do. So at Coinbase, for example, I could say, hey, pay me. I wish I'd done this. Oh my God. When I joined Coinbase, they said, would you like to receive your salary in Bitcoin or kind of in sterling or whatever, and I needed a mortgage at the time. Anyway, bad mistake. But if I'd said Bitcoin, then I would have had a wallet. Coinbase would have known what my wallet address is, and they'd have paid me in stable coins or Bitcoin or whatever. And then whatever I do, whoever I send money to, wherever I go shopping, unless I was super sophisticated, which as you can probably tell I'm not, and set up an array of different wallets, there would have been that extraordinary level of transparency that my employer would have had over me, and I would have been lacking in privacy. So look, I think things like whether it's ZK proofs, whether it's decentralized ID, whether it's kind of people getting smarter with how they use their wallets, I think there's a lot of things being kind of engineered and developed right now, which make me feel confident that we'll be able to hopefully strike this balance between actually kind of the transparency, but also the privacy that people need in order to trust and adopt, this technology more wholesale.
Okay, brilliant. So let's use the last few minutes to bring it back home a little and talk about the UK's position in all of this. So the UK government says that it wants to lead in this in this space, but is it bold enough to actually prove it? And for instance, this the sort of FMI sandbox idea for stable coins, it sounds to me more like a classroom experience than an actual marketplace. Is it a bold experiment, a sign of hesitation? And can the UK actually take a leading role in this situation?
Yeah, look, we hope so. We hope so, but I will say that the next 6 to 12 months, I think, for the UK are absolutely key. So I think we've seen the US, for example, go from kind of zero to past regulation, and I think they'll get the market structure done as well as stable coins by January, February next year. So the UK's been doing a lot of thinking, super sophisticated regulators. I'm sure tons of you in the room like us are in kind of almost daily or weekly kind of like dialogue with them. But there is a massive difference between saying, in the UK, our rules are going to go live at the same time the US is, so we're not behind, which is a little bit the narrative that we're beginning to hear from our kind of friends in Threadneedle Street and elsewhere. But I would say it's great that you're thinking, it's great that we're moving, but we can't kind of like miss this opportunity. And there is a difference between knowing what the rules are, but they haven't yet entered into force, which is the US, because there is a tremendous amount of energy and investment happening in the US around this. In the UK, we're not seeing that. We haven't got a sterling stablecoin, and we're not seeing yet, I think, the levels of energy and investment. Hopefully, Zebu is a moment where, we kind of galvanize the animal spirits.
This is the moment, guys. This is the moment.
This is the moment. But look, Alex, final thing with 2 minutes left, I will say, a big opportunity for the UK right now that we cannot squander is this opportunity for this task force, right? This transatlantic task force on the future of markets between the US and the UK. It's time limited. It's 180 days. We've already lost 20 days, so it's 160, 150, whatever. Mm-hmm. But this is an opportunity for the US to explain to the Brits, this is what we're doing. This is our vision for how we can decentralize and disintermediate massive parts of not just the payment ecosystem, but kind of capital market infrastructure. And this is an opportunity for the Brits to actually link up, join hands with the US and go on that journey together. The Americans will do it anyway. I think this is a terrific opportunity for the UK to bootstrap and accelerate its efforts to go on that kind of radical journey.
But do you think it can be done? Do you think London can leverage its history of being a global center for finance, and actually that there can be enough tangible steps taken to make some of these things actually happen, or is the UK at risk of turning into a flyover zone for investment?
Look, I'm an optimist. I think the UK can. Look, we have one of the deepest and most competitive kind of capital markets and financial centers here in the UK, the rule of law, the talent, etc. So the UK is well positioned. We've probably missed the first wave, but we can take second mover advantage. But again, now is the moment. In the next 6 to 12 months, we need to get Parliament to lay the statutory instrument. We need to get the FCA to bring out their rules for caps. We need the Bank of England and the FCA to deliver clarity on stablecoins. If we start to get that, and if you all can look at it and say, okay, I can roughly see where this is going to land, then hopefully we'll see that kind of energy and investment that we're seeing in other markets where they've produced that regulatory clarity. So I'm going to end on an optimistic note, because I know Zebu is an upbeat, optimistic conference, and say, yeah, I think the UK can do it.
Fantastic. Second mover advantage. I love it. I'm going to finish with just a very real quickie, which is, you've been in the policy trenches for a long time now. But if we meet again this time at Zebu next year, what is the headline that you would most like to see in terms of the progress that we've made over the next 12 months?
Okay, I wasn't expecting this one. Okay, headline would be something like UK markets rebound based on tokenization, something like that.
There you go, guys. There you go. Well, look, I thank you so much for your time. It's a pleasure to speak to you, Tom.
Thank you.
We just raise
And
our
to
hands.
you guys for listening as well. Hope you've all found it interesting.
Thank you very much indeed, Alex, and thank you, Tom. That special relationship with the US and the UK, I can see it coming to fruition again.